Yeah, I mean, if we look at the market overall, what we've seen is we've seen the more complex securitizations where you have big portfolios of diversified risk, and those tend to be run by large corporates who are covering a wide swath of their book. But it doesn't tend to be what the banks are doing most, which is distributing individual assets, usually actually to other banks. And that's been done through the MRPA style BAFT function, and that's very one-off assets. I think what we think is the way to go in the future is to use the techniques of securitization and of those large portfolios to make it easier for the banks to distribute to people like non-bank investors, like insurers, etc.
Pension funds, yeah, I think that's a very good point, because what we've seen is more corporates distributing risk, and we know that the bank market for risk transfers has existed for a long time, and the critical point here is how can we take those assets, repackage them into simple securitizations in a quick and efficient way and transfer them on to investors that want them. Now, of course, there have been objections in the past that securitization is expensive, securitization isn't transparent, securitization adds new levels of SPVs which make things unnecessarily complicated. But I think what we're seeing is, if you start with good assets and repackage them through a simple product, possibly one which can be unwound very easily, and transfer them on, that overcomes many of those issues, in addition to bringing some of the other benefits of securitization, such as securities are products which many investors can hold, whereas they can't hold an MRPA. It could be an opportunity to not avoid the onboarding process of banks in the process, but kind of short-circuiting that by onboarding the sponsor and the securitization vehicle, and then distributing the risk to, of course, the right kind of investors. And of course the transferability as well. Ultimately what people dream of is more liquidity in this market, which really does achieve the objective of turning trade finance into a liquid asset class with a deep capital base which supports the real economy.
Yeah, so I take two things out of that. First of all, I think the banks absolutely are critical in this, and it's all about widening the investor base that the banks have, which currently is difficult because trade are not homogeneous assets. So pension funds, insurance companies can't really look at them in the same way as they look at a 10-year loan, for example, where they just have to do diligence one loan and away they go. Here we're talking about revolving assets that are different. And so using technology to make those assets more homogeneous and make them more digestible, I think is really the way to go, and it will open up that asset class. And that's key for all of us.